So the RBA have just gone 25 basis points down. Now the Australian stock market loved the news and went up. As investors, I mean, what we're trying to do constantly is trying to increase our borrowing capacity. Recently, I did a post about tax in Australia, and it went a little bit nuts. So you look at Medicare, right, which looks after 25 million people. That costs less money than NDIS, which looks after not that many people. The middle class shoulder 90% of the burden. They're the ones that pay all the taxes. They're the ones that work. The small business owners of Australia are the ones that work hard, give jobs and pay taxes. Then the big corporates pay nothing and the really rich people pay nothing. So if you go to a room of 25 people, you have a party together, there's one international student there.
That sounds about right.
Yep. Crazy when you think about it. No other country has this. Jim Rohn used to talk about, motivation is not that good because what if you motivate an idiot? It's going to even do something even stupider, quicker, right? So the important thing really when it comes to property investing is getting educated. 2/3 of people that invest in property lose money, right? And then 1/3 do okay, but only a very small percentage do really well, like our members, right? We're going live. Hello, this is George Markoski and Christina Markoski coming to you live in the Australian Property Chat. We're here to talk about money for life. 3 things we always want to talk about is 1, capital growth. How do you get a property that's going to double consistently every 7 or 10 years? 2, cash flow. How do you get cash flow? We get money in your pocket every week and it goes up year after year. And number 3, how do you keep yourself safe? You get these 3 things together and then you create money for life. And that's what we're here to talk about. If you're watching us live, type in #live. If you're on our socials, if you're YouTube, Facebook, LinkedIn, and the people that are watching the replay in the group, type in #replay because then we know you're watching, which is great. And I know you like my content and we're going to continue. Okay, so let me share my screen and we're going to be
money for life. That's what we're here to help everyone achieve.
That's right. And tonight, we're going to be talking about interest rates.
Oh.
So the RBA have just gone 25 basis points down. So the new interest rate is 3.85. We're getting close to where we want to be.
I feel like I've waited 2-3 years for this to actually happen. It's been a long wait.
Oh, look, when you've been through as many cycles as I have, I've been through more property cycles than most people have had washing machine cycles, put it that way, right? So when you've been through many cycles as I have, you just get used to it. When rates are high, they're going to go down. When they're low,
it's like they're going to go like this.
Yes. So what's going to happen is basically interest rates, they're going to be dropping over the next year or 2. And we're going to have relatively cheap interest rates. So the good thing is the good part about that is it's going to be easy money, which is going to be good for the economy, and it's going to be great for property investors. So what's your move of the rate cuts? I'll tell you this. 1, mortgage relief, right?
Finally.
Which is going to be great. So people are going to be saving several $100s per month off their mortgage with this, the average mortgage.
So higher cash flow position for properties.
That's right. So the good part is 1, mortgage relief, which people need desperately. Okay, people have been struggling. It's been tough.
Yeah.
Then the other thing is savers are going to be set back, right?
Why is that?
So, well, put it this way: in Australia, we've got $1 trillion in term deposits, right? And that's going to, with this interest rate drop, that means people are going to make $6 billion less on interest next 12 months. Right? So we've dropped $6 billion of income out. What does that mean? If you've got money in the bank,
it's shrinking.
It's shrinking. That's right. That's what it means.
But if it's in property, it's keeping up with inflation.
Yes. Now the Australian stock market loved the news and went up.
Nice.
And guess what else is going to go up? Property. Right? So what happens is the market happens very quick. You hear the news, the interest rate drop, and it goes up straight away. It went up about 0.5%, right? So it's hit a 3-month high, the stock market in Australia. But property takes a little bit longer, but it will happen. because I tell you where the smart money is going this year. The smart money is going into property. And you always want to be where the smart money is going. That's the thing.
Absolutely.
Yeah. So
I also heard the four major banks are passing on the interest rate cut next week
yes, which is great. So
on
we're
the
going to have
30th.
massive mortgage relief straight away. Now, if you've been thinking about refinancing, this could be the time, or certainly next time. You know what I
Yeah.
mean? So the timing is getting closer to when you should refinance, depending on the situation,
Hmm.
right? So that's good news. And what it does, it just shows that we've expected this to happen. It happened.
But also, it's going to increase everyone's borrowing capacity and purchase price ability.
Yes, it is. So what it's going to do is it's going to have an impact on borrowing capacity,
Hmm.
which is great for investors because as investors, I mean, what we're trying to do constantly is trying to increase our borrowing capacity because that's one of the biggest limiting factors, you know.
Yeah.
So whenever interest rates go down, it's great news because then suddenly you might be able to redo things.
If
And
you're borderline, you might be able to get into the market and get your next property.
yeah, so if you're borderline, this could get you over the line. But if you've got quite a big portfolio, this can get you a lot more properties
Yeah.
overnight as well, which is great.
It's a lot more leverage, a lot more
Yeah,
power.
exactly. The bigger your portfolio, the bigger the leverage, and that's the way it works, right?
Yeah.
So
Absolutely.
yeah, so recently I did a post about tax in Australia,
Hmm.
and it went a little bit nuts. So I'm going to show you what I wrote.
This is interesting.
So this is what I wrote. If you earn $100 in Australia, the
Hmm.
tax man grabs around $33 first, leaving you $67. Then if you fill up your car with $67 worth of petrol, guess what? 48% of that goes straight back to the government in fuel taxes, 32.16 in excise duty, and $6.70 GST. So congratulations, you just gave the government $65.16 of your hard-earned $100. Welcome to Australia, mate, where tax is a national sport. Now, a lot of people got upset by this. They weren't happy. They weren't happy campers. People saying, George, if you don't like tax, why don't you leave the country? These are some of the comments, right? Because it's interesting to see. Look at this. Saves a millionaire that has no money issues. Get a job with a company vehicle and fuel card like I have. Zero fuel tax. Ha ha. Work smarter, not harder. Not bad. Sadly, yes, we're one of the highest tax countries. Clearly, you haven't been to Scandinavia. No, I haven't. And it's probably a lot worse than Australia. Go live in the States. You'll end up paying a similar amount, but you won't have all the perks that you get with it. Exactly. Like here, we've got healthcare and hospitals. Australians pay approximately 75% of their wages in tax, and that is well documented by world accountants. Okay? So people in the comments are missing the point entirely, and we wonder why this country is circling the drain. FFS, I don't know what that means. Tax isn't a national sport, tax is avoidance. Almost everyone has an accountant and they put strategies in place to limit tax paid. If the rich paid taxes, then it would benefit everyone. Max your super, reduce your income tax. Let that sink in. How very American. Furthermore, if you earn $100 in the payly, you don't pay tax on it. Well, not if you earn 100, but no one earns $100, right? Great fun, the social services we need. So what I want to do is I want to address some of this. Now,
Let's go, George. Responding to your haters.
yeah, I want to address a little bit of this because I think it's important. One, I don't think people earn $100 in Australia. Obviously, they don't. And I was giving an example of someone that pays around 33% tax, which is quite average. It's not a high income earner. And I'm not advocating for avoiding tax either, but I'm advocating for being smart about it and legally reducing your tax to what you should be reducing it. Right? Now, I find it's interesting because it's places like Threads. I mean, we had 10,000 views, hundreds of comments, hundreds of people shared it everywhere. It went nuts. And I find on the small platforms like Twitter and Threads, people go nuts because all they see is one part of the story. And then I find when it comes to long form, it's a bit like when I do this podcast and this live, then people don't get as upset because they can see the nuance and they can see the context of what's happening. And that's a sign of our times because a lot of things are very soundbitey in our world and we don't get to see the big picture. And I think people are now wanting less sound bites and more quality, deeper conversations. And that's what I'm here to give you, right? And I think that's part of the reason Trump beat Kamala. almost started saying Kamala, Kamala, Kamala. I couldn't help it, right? But that's why he beat Kamala Harris, because she was doing a lot of sound bites with the traditional stuff where Trump went on Joe Rogan for 3 hours straight. And when you're talking for a long time, people get to know you a little bit better and understand nuance a little bit better.
Of course, they get to know your personality, they get to know more about you as a person,
Yes,
what your
absolutely.
values are, everything.
That's right. And, this person saying a comment that if the rich paid taxes, we'd all be better off is actually true, right? The thing is, what we have to understand in Australia, we're very heavily taxed and we spend a lot of money on a lot of things. And this is going to be a little bit controversial, but you look at Medicare, right, which looks after 25 million people. That costs less money than NDIS, which looks after not that many people.
Right. Interesting.
So it's like it just ballooned out of nowhere. And I'm not saying that people don't need help, but I know a lot of people that are becoming very, very rich off NDIS because the government is just handing out money hand over fist. And it's not a good way of using our taxes. And we live in a great country where we've got great medical care and everything else, but we need to be better with what we do, right? We've got an opportunity as Australians to have the best country in the world, but we don't, right? And that's because we don't have any prime ministers that are willing to lead and have balls to do something good. And what happens is you have the people on the bottom end and the rich, and then you've got the middle class. And what happens is the middle class shoulder 90% of the burden. They're the ones that pay all the taxes. They're the ones that work. The small business owners of Australia are the ones that work hard, give jobs and pay taxes. Then the big corporates pay nothing and the really rich people pay nothing. The people at the bottom don't have enough to pay, fair enough. And then you've got the two political parties, and Labor are like, yep, let's take money out of the middle class and give it to the poor. And Liberal are, let's take money out of the middle class, give it to the rich, right? And then we're stuck in the middle as the sort of people in the middle of the whole story. And I wish we were more like Norway, where Norway, what they did is they taxed their resources quite heavily and out of the profits. And what they did is created a sovereign wealth fund. And now Norway is the richest country in the world. They own all these corporations all around the world, but it's not the country, it's everyone in Norway. So they don't have to pay any taxes anymore because they've got so much money, right? Now, we've got more wealth than Norway. We just don't manage it right. We give it away for free. We send it off to China and Japan. They turn it into cars, send it back to us, and we pay a big premium, right? And the thing is, we need to be a little bit smarter and maybe more like, Trump, Australia first instead of America first, and maybe think more about our country.
That's what Clive Palmer was pitching.
Yeah, I know, but I don't think. I think Clive Palmer's policy was Clive Palmer first. So I don't know. Look, I'm not that clear on his politics, but the fact of it is, we need to do something. But anyway, this is the end of my rant. I just wanted to have a bit of a rant here because sometimes I like to rant. And now what I want to do is talk about property, which I talk about most times, and talk about what's happening in the property market.
Cool.
And I talk a lot about government, and I'll tell you why. Because government policies affect property prices. So that's why I need to be on top of it.
Yeah.
Now, a few people have been asking the question about the unrealised capital gains tax.
Yes, this is an important one.
Yeah. So I really think unrealised capital gains tax is the stupidest thing I've ever heard, right? So what it means that is if your shares go up or your property goes up in value, even though you haven't made that money, you have to pay tax on it.
And this is what Labor are proposing?
Yes. Good old Labor.
They're just talking about it, though. Nothing's been put in.
They've just proposed it. They're
at
just
the moment.
talking
Nothing's
about it.
been passed.
Yep. Now, fortunately, most of Labor's and the Greens' genius ideas end up in the bin anyway, which is great, right? Because some of their ideas are pure genius. But no, I'm being sarcastic. Trying to tax people, superannuation was created because there's less people working as a percentage of the population than ever in history. Because back in the 50s and 60s, you had like all these young people working and hardly anyone retiring, so their tax could pay for their pension fund. It was fine. But now Australia, the first world, and most of the world is getting an aging population. The demographics have changed quite considerably. We don't have enough working people to pay for people to retire, which is a problem. So what we decided to do is create this thing called super, where you couldn't touch it until you retired, and that was there for you to retire. So the government wanted you to contribute to your own future, or your company or your employer, so you could do that. Now, taxing people for saving for retirement is really missing the point of super. It's ridiculous. So I think it's really stupid. It isn't in play yet, and I don't think it will get through anyway.
Oh, do you want to stop sharing your haters, George, on the main?
Yeah, okay. Yeah.
We've had enough looking at them. Perfect.
Yeah, okay. I've given them way too much
Giving them
stuff.
way too much airtime.
Yeah, exactly. That's right. And look, maybe they're not my haters. They're just people that, are passionate online warriors. But let's talk about state of the nation. Let's talk about what's happening and how it's going to affect property.
Cool.
Okay, so Australia's rental crisis is permanent. Right? So NAB's property survey revealed that 44% of respondents believe that Victoria is at the start of a recovery, whereas only 10% view Victoria's declining market. So look at this percentage of income spent on rents, right? It's big. It's the highest it's ever been. So our rental crisis is permanent.
Wow.
And you look at asking rents, and look at this graph between 2010.
Look at how steep it's gone up since 2020. Look at that.
Yeah. So rents normally go up around 5 to 7% on average per year. But they've done a lot better than that now. Well, a lot worse, a lot better. So they accept this is what's happening, because we need to really understand what's going on. And, this is a crisis. It really is. It's a crisis. So the leading apartment developer, Tim Gurner, warned that Australia's rental crisis could last another 15 years due to lack of supply relative to the nation's strong population growth. 15 years. So when it's 15 years, you know what that's called? It's called a super cycle. And that's what the RBA have been warning about, the property super cycle. A super cycle means when you've got 15 years of lack of supply, that's 15 years of sustained growth, which is pretty crazy when you think about it.
From Liam, my rent went up 50%. Sydney, 2,000 a month to 3,100 per month. Wow. Yeah, that's crazy.
All right. People have told me what FFS means. For F's sake. There you go. Yes. And Australia's rental crisis. So net overseas migration has rebounded to record heights. And that's part of the rental crisis that's happening. And all this is tied back to government policy. And as I was saying about the election, Labor are into big Australia. Then you've got the international student enrolments. 2024, over 1 million people, 1 million students, right? Out of 25 million people, 1 million students. That is huge. So that means 1 out of 25 people in Australia are actually international students. So if you go to a room of 25 people, you have a party together, there's 1 international student there.
That sounds about right.
Yep. Crazy when you think about it. No other country has this at all, not even close. As a proportion, not only in raw numbers, we got the most students, but in also as proportional population with the most students, both. We've got the record. And the temporary graduate visas are record highs.
Yeah, wow. Look at that.
121,000.
Go back a second, George. I just want to comment on that one. Yeah, look how much it has jumped up since 2022.
Yep.
Look at that gap. It's just jumped up and then it keeps going up and up and up.
We don't call Australia the lucky country for nothing. Everyone wants to live in the lucky country, don't they?
Absolutely.
That's why we live in Bali.
For half the year. Rental crisis is permanent. Long-term movements.
Yeah. So our April labour force release from ABS has shown that the growth in the 15 plus civilian population accelerated over the first 4 months.
Wow.
Okay. So, and a lot of people, what they're saying is Labor, right? Part of the reason, and this could be a conspiracy, so I'm not going to jump into any conspiracy theories, but Indians, who are Australia's largest migrant source, tend to vote for Labor. And then Labor comes in And what did they do? Get more immigration. So there you go. And this is the other thing that's happening, the high cost bleed of Aussie home builders. So pre-pandemic now, construction sector insolvencies are double what they are. So I think I went through this last week, so I'm not going to go through it again.
Maybe just give us a summary.
7,000 builders went broke. That's the summary.
Wow. Okay. Shocking.
And then what I want to go through, look at this, okay? This graph is pretty amazing. So between March 2020 and April 2025, Melbourne dwelling values grew by 16.2% versus 43.3% growth across the combined capital cities, right? So if you look at 2020, right? 2020, look at that red line and the blue line. The red line is capital city aggregate, and you look at Melbourne. It's identical.
The same.
But see how it converges
Then
and
it's
gets
separate.
wider and gets wider and wider, right? So this was due, I'll tell you what it's due to. One is who was in power in Melbourne? Forgotten his name now. Everyone really hated him a lot.
Promo.
Dan Andrews.
Dan Andrews, that's right.
Oh, Dan Andrews.
Dan Andrews locked down the state and created some draconian laws on a lot of stuff. And really, a lot of investors left Melbourne, right? In droves,
Hey to Dan.
right? And what, Dan left Melbourne as well? He made it so shit that he left. Yeah, okay, there you go. So what happened is also Melbourne has traditionally had the lowest rate of return when it comes to rent per $1,000. So if you get a normal property, you want to get around 4.5 to 5.5% return, but you're not going to get that in Victoria. So a combination of Dan and poor rental return has stagnated the market for a long time, and it's been stuck.
Oh.
Yes. So when you see the gap in the market,
Dirty Dan.
yep, dirty Dan. But the thing is, so a lot of people look at this and go, wow, Melbourne, it sucks. It's terrible, right? It's underperformed. If you put your normal hat on like a normal person. But if you put on investor's hat on and look behind the scenes, you look at this and go, okay, there's a gap between the red and the blue. Sooner or later, that gap's going to fill up.
Yeah.
There's the opportunity in filling that gap. Now, the thing is, there's a lot of suburbs in Melbourne that are going to do very poorly for many reasons, but there's some suburbs that are going to do extremely well. So it's a matter of picking the right suburbs. But if you can pick the right suburbs, the top 100 in Melbourne at the moment, in Victoria, you can do very well because you're getting properties that are undervalued. And whenever there's properties that are undervalued, they're not going to stay that way for long. People will realise and find out. Yeah. And you can see the median value. Brisbane, Adelaide are higher than Melbourne at the moment. So is ACT. And look, so you look at ACT, right? You look at that, it's 852, the average. There's no gap there. It's too expensive.
So steep there,
Yes.
not it?
So ACT is going to drop,
It's crazy high.
right? You look at Darwin. Darwin could be, the way I see it, is Brisbane, Adelaide, Perth have got some legs on it still. Then I reckon Melbourne's got some legs. I think Hobart and ACT are overvalued. Look at Hobart, 675. It's in the middle of nowhere. ACT is overvalued. And I think once Melbourne starts booming and going back to where it should be, I think Darwin could have an opportunity. I'm still waiting for a few things to tick over before I choose Darwin, but that's on my radar in the future. And then you look at Sydney. Sydney might be good too very soon as well. Yep. So buyers are lining up for Melbourne property at the moment. And you look at our auction clearance rates compared to price growth, and it's funny how auction clearance rates and price growth track quite strongly. And Melbourne house price versus other capitals, this is my favourite chart. And so you look at this, right? So when you look at this chart, Melbourne is the blue line. So when's a good time to buy Melbourne? Okay, 1981, perfect time to buy Melbourne. When's a bad time to buy Melbourne? Bad time is 1977, really bad time. When's another bad time? 85, 89, rip-off. Look at this, 97, beautiful time to buy Melbourne. 2001, it's okay, but not too good. 2005, great time to buy. 2009, bad. And all the way to 2025, terrible. And right here, suddenly good again. And this is what you need to look at. Isn't that fascinating? So this is when you look at behind the curtain on how it works. Okay, that's it for our public group.
Beautiful.
Now we're going to go into our private group.
Before we change over, George, do you want me to read out? I've got a big list of questions here that's just come through.
Let's do it. Let's do it. I'm going to stop.
I'll just read them out. Hey, George, I've never bought a property before. Does this rate drop actually help beginners like me? That's from Chloe.
Yes, it's going to increase your borrowing capacity, so it's going to make it better for you. Absolutely.
Perfect. From Trent. You always say stuff like act now or get your ducks in a row, but what does that actually mean? Where do you even start?
Yeah, okay, that's a good question. Look, depends
where
you're
my ducks start?
Yeah, look, I really believe starting the process of property investing comes to getting educated and learning, right? Because, you don't want to get motivated and then go the wrong direction really fast. It's a bit like Jim Rohn used to talk about, motivation is not that good because what if you motivate an idiot? It's going to even do something even stupider, quicker, right? So the important thing really when it comes to property investing is getting educated. What you need to do is find someone you gel with. Look at someone like me or Robert Kiyosaki. So Robert Kiyosaki, he's great, right? Because he motivated me and helped educate me. There's one thing with Robert is his advice is not practical for Australia, right? His advice is practical in general about knowing the difference between good debt, bad debt, assets, liabilities, all the basics. He's great. But if you want to know about property market right now in Australia, it's people like me you need to talk to because that's what I do every day, right? And so getting your ducks in a row is about getting educated and it's about getting a mentor, right? And that's part of the reason we created our program is because that way you can get your ducks in a row and get help from a team of people to get you.
Actually know which steps to take.
That's right, because
property market.
Because getting the properties is complicated and people should not be doing it alone. The biggest thing you can do, and when you invest in property, it could be the biggest mistake of your life or the best thing you could ever do. So it's not worth risking.
Yeah.
Some people get it right by accident, but that's very rare. 2/3 of people that invest in property lose money, right? And then 1/3 do okay, but only a very small percentage do really well, like our members, right? And that's what you want to do. You want to be in the top 1% of investors if you can invest. You don't want to be in the bottom one. You don't want to gamble and just guess. You want to follow someone that knows what they're doing and you want to make really good money. Because what you want to do with property is the three things is one, find the property that's going to double consistently every 7 or 10 years. Then number two, one that's going to create cash flow ongoing. And three, one's going to keep you safe and you're not going to get in trouble.
Absolutely. From Fraser, I've got some savings, but not much. Can I still get into property now?
Well, not if you haven't got much savings. I'm sorry. With the property market, look, the property market at the moment, you need, at least $80,000 savings or equity, right? The fact of it is, the days of not having a lot of savings are gone. Funny thing is, when we started this program, you could get started with 15 grand.
Yeah.
Can you believe it?
Times have certainly changed.
And people were going, I don't know, George, I'm not sure if I want to invest 15 grand and get a property.
Oh, that's
right?
Great.
And the properties were 200 grand.
So cheap. So
right?
cheap.
And they were costing like $5 a week.
Wow.
I know, but, and the thing is, at the moment, what we're doing, in 10 years' time, I'll be talking about what we're doing now. And people go, oh my God, I can't believe how cheap it was.
I know. We're saying the same thing.
Yeah, absolutely. Every time I look back a few years and talk about what we used to do, it looks really cheap. And what we're doing right now, as far as I'm concerned, the property market now is actually very cheap because what the property market's all about is disposable income and how much it costs you. And it's actually cheap.
We just don't realise, but we'll be looking back in 10 years' time going, wow.
Well, you never realise. I'll tell you why you don't realise.
And hindsight's a beautiful thing.
No, because what happens is you see a property price, right? And then in 6 months' time, they're more expensive, so it looks expensive. But when you look back, they always look cheap. When you look forward, they always look expensive.
Of course.
So whenever I go back to every property, it's like, wow, that was cheap. That was cheap. I was talking to Adam today because me and Adam, we try to get one in each development that we do. And we're talking today going, God, we keep giving away to members. Imagine if we didn't, how much money we'd make. And I'll go, yes, Adam, but our job is to give our members the property first, not keep them for ourselves, right? But we're talking today about, wow, so many opportunities. And we're talking to one developer was complaining that he didn't make a lot of money out of a development because we really negotiated hard. But I said, Adam, he had stress-free. He did well anyway. Our clients did amazing. It's a win-win.
Talia said, I don't own anything yet. Should I buy a house to live in or just go straight into investing?
Okay. You know my answer there, Christina. You could probably answer this myself.
Absolutely.
Please.
Investment property. Because
Yes.
you've always
Why?
got...
Why is that? Because investment...
Best.
Well, you can rent best, but should I get good debt first or bad debt first? That's how you should think about it, right?
Good
That's
debt,
what Talia's... What Talia's asking. She's like, should I get bad debt or good debt? No, get good debt.
Mm-hmm.
Actually, always get good debt first.
Yeah.
Get your bad debt last. That's what I did. I got my bad debt last. And it works better that way. So a lot of people get it wrong. And what they do is they get bad debt first and try to pay off that bad debt, which is hard. And then slowly, and a lot of people go, oh yeah, I'm going to pay off my bad debt first, then get good debt. No, get as much good debt as you can because it's good.
Yeah. Blake, how do I know if I'm ready to buy or just getting sucked into the hype?
Yeah, good question. Look, there's no hype at the moment. Property prices are going to go through a super cycle. We've got 15 years of growth, right? It's guaranteed almost. So really, there's a lot of certainty there. You know, I've been in markets where there was no growth and I still made good money because you got to think about when you've got 15,000 suburbs and you invest in the top 100, even when the market's going down, your suburb's going up. That's the beauty of this. But this 15 years is going to be turbocharged. You know, think about this. If you could buy in the top 100 and make money when the market's going down, imagine when the market's got a super cycle, what you're going to do. It's like adding a little turbo, one of those Nissan 200 SXSs with a turbocharger.
Okay. I already have a property. This is from Noah. What's the smartest thing I can do right now to make the most of the rate drop?
The smartest thing you can do is, one, redo your finances because you're going to save money. But don't just redo your finances. What you need to do is look at your equity. And when you redo your finances, release equity. But you've got to do it the right way. Because if you release equity the wrong way, then you're going to cross-collateralize, and that's not saving, that's going to put you at risk. So it's a matter of sectioning off your debt the right way to create all of your debt to be good debt when you're using it for investment property.
Yeah.
Right? And as you get your equity out and draw it out, you can reduce your rate at the same time. You don't want to do it twice. It's a lot of effort and it costs money.
Definitely. Michelle from the block said, can I use the equity in my first place to buy another property? Another one now that rates are down.
Maybe. It depends on the finance.
Yeah.
Anyway, look, we need to go to our private group, Christina.
Okay. Yes, we'll have to save the rest of the questions for maybe another episode.
Yeah, absolutely, because we've got to go to our private group.
Of course we do. So we'll turn off from the Facebook. Thank you, ladies and gentlemen.
Thank you, everyone. And look, we'll see you next Thursday night. Same bat time, same bat channel.
Absolutely. See you then.
You
Bye-bye.
don't get that reference, do you, Christina?
No.
Yeah, back in the 70s, there was a thing called Batman, and they used to go on every week. And Robin used to say, same bat time, same bat channel, before you were even born, Christina.
Well, that's why I don't know what it means, but it sounds good either way.
Makes me sound old, doesn't it?